Looking at it from the outside, China, the U.S., the EU, and to some extent India, are all developing, individual and quite different approaches to the internet, and particularly around questions of data and personal privacy. So this raises some concerns to me, which I've heard echoed even in the question of new technical upgrades to the internet, about what's so-called walled gardens, or a moated approach to fintech and internet commerce. So what's your view about that, and then the ability of the Chinese fintechs who come from a particular environment with regard to very open access to consumer data? How can they adapt if they try to move outside of their current situation?
Well, I don't think their success and their strength relies on there being very open and loose privacy and rules regarding data. I think that the companies that want to go global completely realize that to be global and to be in Europe or to be in the US someday, they're going to have to be very good citizens. The standard will probably be higher for them in a lot of ways, informally. And so I think that I think they've got very smart people, great technology, and are as well positioned as anybody to be successful in that environment. I also think they're going to expand through acquisition, and so you may have seen Ant bought a company called World First out of the UK a week ago, and so that's an example. So they will inherit local talent and local knowledge and local regulatory relationships to do this. The only other issue will be a Huawei issue where there's just, or a MoneyGram issue where there's politics involved, and there's mistrust, and there's just a view that doesn't matter. With the risk of missing something when you've got hundreds of millions of customers on a database. I don't think that'll happen, but I think that's maybe the wild card. Mm-hmm.
I was struck by what you said about the absence of credit bureau agencies.
Right.
Over the long term, clearly that could be solved by gathering more data.
Right.
Customers developing a credit history. Over the short term, that could be, that absence could be filled in at least one of two ways. One is there could be automated solutions that try to predict creditworthiness based on, internet data. The big tech companies could use what you like, what you listen to, your online behavior to predict creditworthiness.
Right.
On the other extreme, you could have essentially human judgments being made by loan officers that ask you some questions, get some references, look at your past financial data, and make basically a gut call.
Right.
The online data is a lot more scalable and cheap, but then how much can you tell about someone's creditworthiness from their online activity? Maybe direct human analysis would be better. Which one do you think sounds like how it'll be filled?
Well, I'll tell you one thing I was thinking of saying that. So Lufax is the leading online startup lender, and they say that for fraud detection, the variables are about 50% social, behavioral, and 50% sort of classical financial services. But for credit evaluation, it's almost all financial. And so one of the big questions is how good are the models, right? Because most of the startups have bootstrapped their way into, they've gotten a lot of data. It has to do with your activity on the internet, who your friends are, what kind of computer you have, what your mobile patterns are, and done a lot of work with that, but it hasn't really been tested, and as compared to Ant's data, which is more transactional and deals with real transactions. So it's hard to predict. I think so. I'm not sure. I think what has to happen is you ultimately need transactional data to do this the right way through the cycle, and so So I think successful companies will figure out a way to do that, whether they start with a pure digital way or whether they have branch networks. I mean, the problem with branch networks and physical, or maybe it's video, if you think you can get the same type of body language and the same type of knowledge that way. But there's a view that you need to do that for larger loans, and it's worth doing it for larger loans because the economics are better. But you can't support, the economics don't work with that model for smaller loans. So anyway, I don't think I directly answered your question, but
Well, one of the interesting things about the entire fintech phenomenon, not just in China but everywhere in the world, is that it has risen during a period of extensive economic growth and low interest rates, and so none of the models anywhere, particularly none of the new models for thinking of credit.
I don't even know what a cycle is in China.
I know, I forgot. There may not be such a thing.
No, that's what what I think,
Yeah.
actually.
Yeah.
So.
And whatever cyclical things are overwhelmed by these demographic trends you're talking about now.
Yes.
So one possible future for the U.S. is a version of the Chinese model where you have the big tech companies, Facebook, Google, Amazon, and maybe J.P. Morgan and Bank of America if they get themselves together. Essentially having all the customers, acquiring the independent fintechs, and using the banking or insurance system as essentially a utility. Do you see any way in which the U.S. system is going to move more towards the Chinese system? I was particularly struck by that in the context of TechFin, which avoids some of the issues that have so concerned people about that here.
I mean, my instinct is no, it's not going to happen quite that way. But forever is a long time too. So I don't. It just sort of depends on your time frame a little bit. I think. I'd say a few things on that. One is the tech giants don't want to be regulated, so hard stop on that. But you've intelligently already figured that out because you said they'll be there as a utility. So will the internet giant, so Google or Apple, will have all of the customer relationships, take all the margin in the business, and these things will just be commodities that will be provided in the background and regulated in the background. I don't think that's the case either. First of all, it's really hard for the tech company to present a user experience and a proposition to consumers that is seamless and quick and accurate and everything you want. And in the background, you've got all of these different providers providing the products.
Coded in COBOL.
As the way you describe it, as a utility. See, I think what's more likely to happen is there'll be a much more integrated relationship between the product providers and the front end, internet giant. And so they'll talk about developing. I mean, think about the way credit cards are in the U.S. I mean, I think that's an example of, you'll have there'll be partnerships where the credit card provider will be prominent, won't be utility, will get a decent chunk of the revenues, and Apple will get.
For example, Apple and a small bank called Goldman Sachs.
Yeah, we'll get what they get. And the question, I think, is over time, how will the pie get split? Where will the data? Who owns the customer? And really, tricky questions like that will have to be answered. So I think it's more like that direction. One thing I'd say is payments. I think payments is an area where you will see the giants they already are doing it, but become important because I think they can do that without being regulated, and there's a lot of margin in Visa's and MasterCard's businesses. Their net income margins are 50%, and so when you think about longer term, maybe you can see disintermediation in that area.
I mean, Square Cash is already working pretty hard at that.
They are, but they use Visa and MasterCard for their network.
So at the end of your talk, you were talking about how the big banks are more tempted to work with the startups than with the large internet players. That made me wonder what the future of consolidation and acquisition and concentration in this industry is. Right. So I'm interested in, who is merging and/or eating who? Is this mainly horizontal mergers, or is it cross-sector acquisitions? Also, what's the state of antitrust in China? Particularly in this industry, there are big returns to scale that could create the temptation for one large company to eat up everyone and charge monopoly prices. Or something like it. Would authorities step in? Is there a well-established competition policy in China?
I'm not. I think just to answer the last part first, I think the authorities do think about that a lot for a variety of reasons, including antitrust. And and there are antitrust laws and rules in China. I'm not an expert on them, but I do think that I think they look at Ant and Tencent and are thinking carefully about how big and powerful they are. And I think that's one of the reasons Ant and Tencent are pursuing global strategies, so they can grow outside of one particular market. As far as, I don't want to overstate the point on the big banks or the big traditionals not wanting to work, because they already are working together. But I do think that is one of the question marks, I think, in the model, which is as this develops, will there be a reticence among some of the larger banks from working with them? And I think what that means is the larger financial institutions may be more comfortable working with good startups, but not Ant and others maybe, or they may buy these companies. They might buy what they need and so that would be vertical. I think I don't think that issue in and of itself is going to affect consolidation horizontally across either here or in China or here or China.
Has there been acquisition activity by the SOE banks in the fintech space?
You mean buying fintechs?
Right.
Yeah, I think there's been some investment. I'd say so. Many of the banks sort of look at it like banks here do. They've got a sort of a venture businesses and corporate venture capital and private equity businesses, and they look to make investments. Some are more active than others. That's a good, but not necessarily the only thing I think they will need to do to be successful. And I could see a time when they look to acquire control of different companies, both because they get comfortable with their own strategies, and also some of these, I think there's probably more companies than there needs to be in some of these sectors, so that'll drive it as well.
So, the major story of the last year here has clearly been the trade tension between China and the U.S. And if we were having this conversation 3 or 4 years ago, we'd be thinking about when is Ping An and Baidu and Tencent and Ant going to enter the U.S. and how is that going to affect the dynamic here? Do you think that's still possible? Is it different here and in Europe? And so, in terms of the growth prospects outside of the market, clearly they've been very focused on South and Southeast Asia so far.
Right.
But is there an opportunity for them still to move beyond an Asian base?
Yeah, I think they want to, and they're pursuing, both Ant and Tencent are pursuing investments globally. So they've made investments in Latin America and Europe, and Ant has very aggressively focused first on Southeast Asia, and has, I think, planted their flag almost everywhere they want to be in Southeast Asia. They is well known, they tried to buy MoneyGram, and that got turned down for CFIUS. And I think right now is probably the view of the large internet giants in China that to do an acquisition in the U.S. would be quite risky, both given potential CFIUS, but beyond that, the political situation is very tricky. I think someday they want to. By the way, you can Alipay is accepted here in the U.S. Mm-hmm. You could, I can tell you afterwards, you can open up your own Alipay account and use it here. So they're going around getting merchants. Now what that means is they have a good share of Chinese people who happen to have Alipay accounts, right, and who are here. But that doesn't allow them to achieve their dream of being an important domestic player in all the places where they are,
Does anyone here have an Ant or Alipay account?
I'm sure.
Yeah, so fairly significant number.